Hello, everyone, and welcome to another edition of the Forex Technical Market Update. It is Monday, June 1st, and time really does fly. And it just goes to show that opportunities and time waits on no one. And in my mind, the year just started a couple of weeks ago. Uh, but anyway, let's go and take a look at what's happening in the markets. And what we see here is that the euro is up on the day. Uh, we had a Last week we had a rally in the dollar. Rally in the dollar, so short euro. We had a slight 3 day correction, and now the market is closing to the downside. Critical area of support is down by the previous low near the 108 level, as you can see here on this daily chart. If I go down to the 4 hour chart, you see the level here denoted by this candle here. So if the market closes below this level on a daily basis, that will be bearish for the market, and then that will set us up for eventually a test of the 105.20, and ultimately, if that's surpassed, the 104.59 level. Taking a look at the weekly chart, we see that last week we had a doji candlestick pattern, and a close below this doji candlestick pattern will definitely be very bearish for the markets. Okay, so with our portfolio, we are currently short the euro, and I'll maintain this short position until the market says otherwise. And what we can do also to see an area of support that could be coming in the future is to draw this trend line here and see how the market reacts to this emerging trend line in the euro versus the US dollar. Okay, moving on to the Japanese yen. We broke out of a consolidation pattern last week, and what has happened ever since is that the market is rallying up to new highs. And this happens often when the markets break out of a consolidation pattern, especially on the daily chart. You normally see a reaction. Not every time, but you normally see a reaction in the markets because most folks are looking at the daily charts and the higher level charts, and I believe it's just once they see certain technical levels are broken, then all the major funds press the buy button or the sell button depending on the case, and it's a self-fulfilling prophecy. So this market is rallying up to new highs, and if you're long this market, I will advise you continue to stay long until the market gives you evidence to get out. For our portfolio for our members, we are long the British pound versus the Japanese yen, and just for our trading and our system, technically it just looked like a better trade than a USD Japanese yen. So we have been long this currency pair, particularly playing on the Japanese yen weakness. And taking a look at the British pound Japanese yen, we see that we're up against critical resistance in the 189.71 level, and the market was above this resistance level briefly, but has not closed definitively above this 189.190 level, and it's proven to be a pretty strong resistance. So for this week, we're looking to see if the market can penetrate and ultimately close above this 190 area in the British pound Japanese yen. If you are currently long this market, I will advise that you maintain longs to see how the market reacts to this level here. And for those of you who are long or portfolio, well, it will be automatically closed out if the market fails at these levels. Another market of interest, British pound, Australian dollar, almost the same situation as the British pound versus the Japanese yen. The market was in a triangle. We broke out of this triangle and it's now challenging the all-time high near this $2 level. And just as how we are monitoring the British pound, Japanese yen, we're also monitoring this pair to see if the market can close above this $2 level or the market will eventually fail. For those of you who love chart patterns, if the market fails at this level, this will be top one. And if it ultimately gets a sell signal, that will be top two. And this would be called a double top. I'm sure most of you know that, but for those of you who don't, that would be a double top. But for the double top to be confirmed, and this is one of the things that folks fail to understand, for a double top to be confirmed, it will have to close below this swing low. So just because you see a sell signal here, that does not mean it's a double top. You will have to now close below this level. That will then confirm the double top. But for our portfolio members, we are still long this market and we will continue to maintain longs. Taking a look at the Canadian dollar. Canadian dollar bottomed out in the 120 region and is currently rallying. The next area of resistance that I can see on this chart is the swing high at the 126.67 level here. Let me just draw a line. The 126.67. This is the next area of resistance in this market. We can also look at our pivot point resistance numbers for the new week. We have, and this is definitely an area to look out for. Let me draw a longer line here. Okay, we have monthly resistance, monthly R1, along with the weekly R2. So that is an area where you have to keep in mind that it could pose as significant resistance, because you have a swing high here and you have projected pivot point resistance levels up at this area here on the Canadian dollar. So for those of you who are along this market, definitely keep that in mind. Okay, looking at the British pound is down on the day, and ever since we broke this critical area of resistance, the market is backing off. Now, something to look out for the British pound is how the market reacts to this Fibonacci retracement level near the 618. That's if we get down to that level. And why? Because we have a swing low here. We have a swing low near the 618 retracement level, and this area could offer, let me just go on the 4-hour chart, some critical support. As you can see, we have a monthly pivot point number below it, a weekly pivot point number, and a swing low. So this is definitely this 151 area down to 150 area is something we'll have to look out for in the British pound. And remember, these points are not exact points, because with the British pounds are a very volatile pair. So you could add plus or minus 100 pips, 150 pips to these levels that we're speaking about. Because as I said, pivot points are not exact points to the pip. They are regions where you'll find buyers and sellers around these regions. And it's definitely possible for the markets to punch below or above the areas respectively. Okay, now what I want to speak about and I want to mention specifically is the idea of trading with systems. And I often come across and folks often ask me, how can you be consistently profitable in the market? And I will say you have to have a system. Now, what is a system? A system defines when you are buying, your buy, when to buy, how much to buy. That should be a H. How, how much to buy. 3, your stop loss level. Your stop loss level. And your exit, when to get out. These are things that are critical with a trading system. Often folks are trading and they look on a chart and they say, oh, I think that, okay, for example, what's happening now in the markets? The market is closing down below the S2 pivot point. I will just go bearish, and because I think it will go lower. That's not a system. You have to have a system is something you can repeat day in, day out, and it is a set of rules for you to enter a trade. So a rule could be, for example, is that if the market hits a daily S2 pivot point and I get a buy signal, I will buy the market. That is a specific rule, and that's something that you can back test, and that's something that you can look at over time. And too often traders are trading basically by the seat of their pants based on what they feel at the time. And one of the keys to be successful is to develop a system that you can trade consistently. And I will say, if you don't have a trading system currently, stop trading, because eventually what you will do is waste your money. And I've heard many stories of folks losing thousands and thousands and thousands of dollars in the market because they essentially did not know what they were doing. So a trading system is the number one thing that you need to do if you don't have one. The second part of the puzzle is actually following the system, but that's actually more advanced. But the first thing you need to do is get a reliable system that you can have confidence in, that will be profitable. Because as anyone can really trade profitably, it's not as difficult as folks may make it out to be, and it's not as elusive as folks make it out to be. But you just have to put in the work to develop your skill and your systems to the point where you're profitable. Okay, so thank you very much for listening. And if you don't have a system yet and want to still make money in the Forex market, you can click on the link below and sign up for our signals. You will see exactly how our system operates, and how we enter trades and how we exit trades. Everything is completely transparent. You'll see our entry points, the stop loss levels, our exits when we're exiting the trades, and all is there for you to see. And it's also a lesson in how to manage a portfolio responsibly. So if you want to start profiting from the markets, click on the link below. And I hope you have a wonderful trading week. And it's the 1st of June. Have a wonderful June. Thank you very much.